Welcome back, Turning Hard Times to Good Times. I'm your host, Jay Taylor. I'm really glad to tell you that Michael Oliver is with me once again. And even more importantly, I want to tell you that we are anticipating Michael will continue to be a guest from time to time, every other week or so, and when we go to the new podcast format on January 24th. Welcome, Michael, and thank you so much for being with us again.
Hi, Jay. Good to be back. Yeah.
It's good to be back, and it's also good to tell people the place to go to really take full advantage of Michael Oliver's expertise and his wonderful technical analysis is olivermsa.com, olivermsa.com. Well, Michael, as 2023 gets underway, I'd like to get your current assessment of today's global economy and financial markets and where you think they are headed this year.
Well, a lot lower. The paper assets, the bubble, the dozen-year bubble. Sevenfold in the S&P, 16-fold upside in the NASDAQ. Mini bonds went up big. T-bonds went up big. High-yield corporate debt went up. Now they're all going down big together, meaning in the paper asset world, which was so bloated for a dozen years by central bank policy, there's no safe haven there. You know, it used to be you could, it was the old dogma, 60-40 stocks, bonds, be balanced. Yeah, well, the 40% went down more than the 60%. The bonds went down enormously.
Yeah.
Like, I understand that I don't know that it's true, but I think it is probably, that you have to go back to the 1800s to find any kind of time where bonds and stocks went down so seriously together. We've had big bears in stocks, but some balance in bonds. But this time, everybody got kicked, no matter which side of that paper equation you were on. And so there's only one asset category that sort of, held, and that was commodities. Gold was unchanged on the year. Silver up 3 or 4% on the year. Bloomberg Commodity Index is up 13% on the year. So all the things the Fed says they're fighting didn't get clobbered. Instead, the paper assets got clobbered. Well, that's because they got inflated so badly for a dozen years. So the Fed's fighting inflation, all right, but that's the one they created. The other issue I'd like to sort of step toe into is the political, social disorder realm. Everybody's focused on markets, companies' earnings, whether retail sales are dropping, unemployment numbers. Nobody's talking about political disorder and social disorder. And I think it's coming. And I'm not the only guy to say this. Nouriel Roubini, who is hardly on the spectrum where I am, I'm libertarian, and he's, I think, been on the Democrat side for years. But he thinks, it's basically the end of the world situation we're facing globally because of the central banks. And it's going to be not just down, but down big, and also reflect itself in social disorder. He hasn't gotten specific, but he's hinted at that. And there's some other major economists out there who also see this as having wave effects that are beyond just economic. Looking right now at the American political situation, the Republicans barely won the House. Okay, they thought they were going to have a big wave. They didn't. They barely won it. Now they can't even get the speaker elected.
Nope.
So Trump is going to run in some manner in the 2024. He's not going to retire in history and look back at his portrait on the wall. He has a different view of himself. And so if he thinks that the GOP, which is definitely a fragmented party now, is going to nominate him and he'll run under that banner, okay. But if he perceives that that's not going to happen, I almost guarantee he's going to run in a third party and he'll create one. And, the last time we had a third party candidate run was the Texan. What was that back in the
Ross Perot?
Bush versus Clinton. And this guy ran and he got like 10% of the vote, 15% or so. It's significant. He didn't even have a party. Trump will have his hardcore with him, and if he takes that away from the GOP, let's call his hardcore 20-25% of the GOP. Maybe it's more than that. But if he took that away into a third party, that would destroy the GOP. They couldn't win anything. They wouldn't win congressional seats. They certainly wouldn't win the presidency. And now, on the other hand, let's say he did get the GOP nomination. many in the GOP would not support him.
Right.
Because they've divorced themselves from him. So that segment of the party would break off, in which case he would highly unlikely win the election if he ran as the GOP candidate, because the party's fragmented. Yeah. So what does that mean? Well, it means the people who are behind him would suddenly not have any alternative, except probably another Democrat gets elected. And so what would they do? I'm going to throw a few words out, and I don't know that they'll happen, but words like secession will come up. Florida, Texas, and so forth. I mean, you could have real political fragmentation that would reflect itself not in the halls of Congress, but literally in the streets. And so I think that's another consequence, especially if people start getting hurt financially, where the desperation is a tone. And then suddenly you have a political outcome that isn't favorable to their views. This could get very interesting in 2023. I don't think you have to wait to 2024 to find out what's going to happen here. But that's a variable that nobody's talking about. And I think it's a huge one. It's 52 pickup type situation. So that I don't know what effect that has except more disorder in various ways. Anyway, so MSA favors what? Gold and silver this year. We think last year proved the point. The point being that, okay, the Fed says they're going to beat inflation. Well, what didn't go down? Commodities didn't go down, even though they had a pullback this year. They still were up. Gold ended up unchanged, and silver up 3%. While the S&P was down 20, NASDAQ down 30, T-bonds down 30, 35%. Yeah, something's wrong with their notions. We've all known that anyway.
Right.
Anyway, it's all going to unfold, and I think 2023 is likely to be much of it will show itself then.
Well,
not be dragged out for 5 years,
Right. Well, we've had this enormous misallocation of resources thanks to manipulation of the monetary system, driving interest rates below anything resembling free market, market determined rates. And what you've done is misallocated. So, the Austrian idea of malinvestment. I mean, I was just asking Chen, my guest right before you, and he's been big on the biotechs, and I said, Chen, don't you think that this is going to be a problematic environment for the biotechs, the ones that aren't producing any cash flows or any earnings yet? And he said, yes, he agrees with that, and he's going to what he calls the little biotechs this year, the ones that have cash flow and earnings, because he's big on gold and silver. That's his favorite, but he also plays some of these other markets, but that makes a lot of sense. Well, I think there's another thing I would offer to you, because we're going to be talking to Alistair McLeod after, in a couple of minutes from now. But his view is another thing we're not hearing anything about is the deleterious effects of the Ukrainian war on the United States and its economy and its interest, what's going on here, because his view is that it's actually strengthening and pulling the United States and its allies apart. Essentially, it's Russia's not doing badly on its net exports. It's selling lots of oil. The Saudi Arabia and those countries that are producing the oil are warming up now to China. At the same time, they're not too interested in the United States because we're saying we're going green and we don't want your oil anymore. So guess who does want it? China, India, those countries that have the vast majority of the world's population. So Alistair is also, I think he would agree with all the things you just said. He also would throw that one in there as a threat to the United States dollar. Now, we have a lot of people that are, this is a debate on this show, the dollar milkshake theory, the people that hold that the system as it is now will continue to exist. And whenever you have strains in the system, it makes the dollar stronger vis-a-vis its trading partners, or let's say its NATO partners. And I guess as long as it lasts, that seems to be true. Interest rates go up, it hurts everybody else more than it. In fact, it brings dollars back to the United States. But at some point, Alistair argues that the rest of the world has got enough dollars. They're swimming in dollars. They got more than they want. And, so I don't know. We'll see where it goes. But I don't know. You have any thoughts on that idea?
Well, the other thing is the dollar looks like it's broken to me. However, a caveat here. you could see the dollar rally back up into the high 106s early in this quarter. Right now, we got up the upper 104s today, so we're talking a 2% more rally. Okay, no big deal. That would impress a lot of people. There's some technical reasons for that. It's not bullish. It's just that there's some housekeeping that I think needs to be done in terms of generating that rally. But don't be deluded by that rally. I think ultimately the dollar's going to fail. And when you break everything, basically, you've broken the bond market to the point where our Secretary of Treasury says she's fearful of the illiquidity.
Yeah.
That's the worst word you can use in any market. It's not just that it's going down or going up too much or down too much or too fast. It's illiquid. This is the mortgage-backed security term, okay?
Yeah.
To apply it to the U.S. government debt market, and it's validly applied, and she wasn't mistaken when she said that, is a statement of, good grief,
Yeah, that's revolutionary. I mean,
No.
I mean, that's always been the argument for.
Yeah. Well, with the assumption that this dollar situation is going to remain despite the fragmentation of everything else.
Right.
I'll take that bet. Okay.
Yeah.
Everything is going to get broken that you think is normal, especially things that are dictated to and governed by governments. In other words, not by market forces. So if you think that the government edifices will stand, no, they won't. Fragmentation is going to occur. It's all part of this whole process.
Yeah,
and,
it's hard. I mean, what we're talking about are major changes. It's very difficult for most people to get their heads around because, I'm 75 years old. I've lived in a system that's been the same for all my life. I can't see, other than reading the history books, I can't foresee that. So it's very difficult for people to see anything so dramatic changing, I guess, isn't it?
Yeah, it is. And this is one of those times, though, where it's, multi-generational event, not just something that happens every 20 years. This is not a normal stock market decline. We see these little boom bust cycles all the time. This is different.
Michael, I know.
Go ahead.
Yeah, I know that you provide some specific numbers for your subscribers, but if you maybe just give our listeners an idea of what you expect in the equity markets. I don't think you believe we've bottomed out yet, do you?
Oh no, that word keeps coming up. You watch CNBC or Fox Business News, the chatter word is bottom, or is it bottoming? Even to ask the question implies that there's a possibility, okay?
Right.
That word keeps getting tossed around, even if there's some skepticism about it. When that word ceases to get tossed around, then maybe we're near something. We suspect the S&P could go this year. Now, I'm not saying this is a bottom, but the next support we see of any significance is 2,700.
Wow.
Well, that's 1,000 plus 1,100 points below where we are right now. That's huge. NASDAQ 100, which is trading above 10,000, we see it down in the 7,000s, mid 7,000s. So there's another huge percent decline before we see what we consider to be next support. And we suspect we'll see that this year. That will have huge personal impact on people. Not just their portfolios, but now we're talking, unemployment will start to shift, which is a lagged indicator anyway, and so forth. And so the reality will begin to hit. And the central banks, there's other people aside from MSA that are saying we'll flip back to what they normally do, which is print. They have no choice. Yeah.
Well, that's why we own gold and silver, no doubt about it. Thank you very much, Michael. I'm not happy about what I hear, but I think we do need to face reality and, as best we can, prepare for it. So I want to thank you very much for spending time with us. Once again, we do look for that capitulation, I guess. And you and I are old enough to remember those events when they've happened before, when nobody wants to even think about buying stocks again. Never.
Yeah.
And then that's a bottom. So.
Yeah,
and then you can find some. Then maybe if we remain intact, we can find some good opportunities. That we shall see. Thank you so much, Michael. All the best and happy New Year to you and to your family.